Hey everyone, welcome back to Corporate Dakota, the place where we uncover the hidden truths behind corporate filings, and tonight we're digging into AgEagle Aerial Systems Inc. and a rather interesting move they've made and what it could mean for them. So buckle up, because what we're about to discuss could seriously shift how this drone company operates and interacts with its investors. Before we dive deep, if you love getting straight talk on company financials and strategies, make sure you're subscribed. And hey, we have a fantastic community on Discord where we break down these reports even further. The link is in the description below. Alright, let's get straight into it. AgEagle Aerial Systems Inc. has filed a current report, basically an important announcement. This isn't just any regular update though. This is about a significant deal involving their preferred stock. Think of this report as a formal announcement to the world about something big happening with AgEagle. And that big thing is a new agreement where they are issuing and selling a special kind of stock called Series G convertible preferred stock. Now, AgEagle is a company that makes drones, and they are looking to raise some serious cash to fuel their operations and growth. They've entered into a securities purchase agreement. This is the formal contract that lays out the terms of this sale. The plan here is to sell up to 100,000 shares of this Series G preferred stock. The deal allows them to sell an initial chunk of 12,000 shares right away, and then potentially sell another 88,000 shares later. This is all part of a registered direct offering, which means the shares are being offered directly to investors and they've been registered with the right authorities. This initial sale, meaning the first 12,000 shares, has already happened. And guess what AgEagle got for it? A cool $12 million. If they managed to sell all the additional shares, they could bring in a total of $100 million. That is a hefty sum of money for a company like this. Now, like any major deal, there are certain promises they've made to each other. These are standard in these kinds of agreements. They involve things like assurances about the company, promises to do or not do certain things, and ways to handle any potential issues. Here is a really important part for existing shareholders. AgEagle has to get approval from its shareholders. This is because the company might issue new shares of its common stock when these preferred shares are converted, and that could dilute the ownership percentage of current shareholders. They need approval if the number of shares issued upon conversion goes above a certain percentage of the stock already out there. This is a way to protect existing shareholders from massive dilution without their say. This entire offering is being done under a proper registration statement. This is a legal requirement to make sure investors have all the necessary information. Think of it like a detailed guide about the investment. This section basically tells us that whatever happened in item 1.01, which was about the material definite agreement, also affects the rights of the security holders. It's a bit of a cross-reference, but it highlights that this agreement changes things for the people who own pieces of the company. So AgEagle has officially filed something called a Certificate of Designation for this new Series G preferred stock. This is a legal document that defines all the characteristics of this new stock. Let's break down what this Series G preferred stock actually is. It is designed to be ahead of the common stock. This means if the company makes profits, holders of this preferred stock get paid dividends before common stockholders do, but only if the board decides to pay them. Here is a key point for investors watching this. This Series G preferred stock generally doesn't come with voting rights. This means the holders of this stock don't get a say in how the company is run through voting at shareholder meetings, unless the law specifically says they must. This stock is convertible. That means the investors who buy it can choose to swap it for actual shares of AgEagle's common stock. The price at which they can convert is set at $1.23 per S-share. So, if the common stock price goes up significantly, they can convert their preferred stock into common stock and potentially make a profit. This is a common strategy for investors looking for a bit more security than common stock, but with upside potential. The company is also including some expert opinions with this filing. They have an opinion and consent from a law firm called Duane Morris LLP. This is usually about the legality of the securities being issued. Now, typical for these reports, you'll see a section on forward-looking statements. This is basically a disclaimer. AgEagle is saying that some of the things they say in this report are their best guesses about the future. They use words like anticipate or expect. They're warning that things might not turn out exactly as planned due to various risks and uncertainties. They mention things like future purchase orders, the success of new programs, and getting shareholder approval. This is standard legal practice to protect themselves from lawsuits if their future predictions don't come true. Finally, we get to the exhibits. This is where they attach supporting documents. We see here the Certificate of Designation for the Series G preferred stock, the legal opinion from Duane Morris LLP, and then a note about the cover page interactive data file, which is basically machine readable data for financial reporting. Now, Let's really look at what this means for AgEagle. They are raising a significant amount of money, which is crucial for a company in a capital-intensive industry like drone technology. This funding could allow them to scale up production, invest in research and development, and maybe even expand into new markets. The fact that they are issuing preferred stock means they are attracting investors who have a bit more confidence in the company's stability, as preferred stock has certain liquidation preferences over common stock. However, there is always a flip side. The conversion feature means that a lot of new common shares could flood the market if AgEagle's stock price performs well. This could dilute the value for existing shareholders. That is why the requirement for shareholder approval on certain conversion issuances is so important. It puts a check on excessive dilution. The lack of voting rights for Series G holders is also notable. This means the current management and board retain control, but they also have a responsibility to ensure the value of the preferred stock is maintained, and that the company is run effectively to satisfy investor expectations. Looking ahead, the success of this move hinges on AgEagle's ability to execute its strategy with this new capital. Can they effectively deploy the $100 million to drive growth and profitability? That is the million-dollar question, or rather the $100 million question. Investors will be watching closely to see if this funding translates into tangible business improvements and a steady increase in their common stock price, which would be the trigger for those preferred shares to convert and for the company to truly start seeing accelerated growth. So, what is my take? AgEagle is making a bold move to secure much needed capital. The preferred stock offering strategy is a double-edged sword. It brings in money and has less immediate impact on control than a common stock offering, but it carries the risk of future common stock dilution. The key for them now is smart execution and transparent communication with their shareholders. Alright, that is our breakdown of AgEagle Aerial Systems Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.